Tyler, Albemarle stock is up double digits this morning. Right now, I'm looking at it. Market's been open less than 10 minutes, up about 12%. Looks like there's some rumors, some news out there that a mine in China, lithium mine in China, is being closed. Don't know a lot of information right now, but let's talk about what are the implications for Albemarle? Why is the stock up? And what do we think investors should be doing?
Let's go. I mean, we're Albemarle's up double digits, SQM's up double digits, Lithium Americas is up double digits as we speak. There is a lot of excitement in lithium as right now.
Let's get to it. I'm Jason Hall. This is Investing Unscripted. He is Tyler Crow. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go check out our special link. It's fool.com/unscripted. Go to that link. You can get access to The Motley Fool's 10 best stocks to buy right now. Go check it out. Okay, Tyler, what's going on?
So it's a couple of things. Obviously, one story that we have been talking about quite a bit over the past year has been this steady decline in lithium prices, right? There's been this kind of slowdown in demand from electric vehicle companies because sales growth has been moderating. And there's over the past couple of years, there's been a lot of activity on the supply side of new mines coming online. And so, as much as we have a growth trajectory in the electric vehicle and the lithium ion battery space, it was, I think the consensus was it was a little oversupplied, like a little bit too much supply had come in all at once, and prices were clearly reflecting that. As I'm sure Jason's pulling up a chart right now to show Albemarle's stock price over the past year or so, it's been pretty ugly. But what happened today and why everything is up is because that a Chinese electrical vehicle battery company, CATL, they're a very large battery producer, as well as having some of their own lithium production. Basically, what has happened is that they have said that they're going to, the term they said was moderate demand. And they're actually going to be suspending operations at one of its lithium mines because production prices for lithium are so low and they can probably get cheaper prices just from the open market anyways.
Yeah,
So
if you can buy a product from somebody else for cheaper than you can produce it yourself, you buy it from the other guy.
yeah, and it sounds crazy, like, oh my, how is that even possible, right? Well, it's actually pretty common in the mining space. One thing I would point to as an example of this was the uranium market for much of the late 2010s, where there were several companies that were selling lithium for or sorry, uranium, excuse me, for much less than what it could be produced for. And to the point that it was just like, it seemed illogical. And so this is a thing that happens in mining probably more than maybe a generalist investor who doesn't spend a lot of time in commodities would see and see as like, oh, this can't be sustained. It tends to last for a little while until eventually somebody pulls the plug, like a CATL, who is a major lithium producer and consumer.
Okay, so again, the key behind this is the story with lithium has been playing out for a long time. I showed that chart on the screen while you were talking that showed how much Albemarle, SQM, it's the Chilean miner, and Lithium America stocks are down from their peaks. I'm going to share that same chart and just show like their stock price movement. These stocks have all moved a ton over the past 5 years, and they're all actually up from that point 5 years ago, but way down from their peaks. And this correlates exactly with what lithium prices were doing. As lithium prices began to come down, the stock prices continue to fall as well because now they produce a lot of these producers. They have some fixed price contracts for some of their production, but a lot of it they're selling at spot prices. And when prices are down, your profits are down. When your profits are down, your stock price is down. We see that play out with mining stocks. So let's circle back around to these. I know one that we've talked about Albemarle many times on this channel. I know you know a little bit about SQM, Lithium Americas as well, but thinking about where we are for investors looking at the space, thinking about the opportunity, do you see buying opportunity? If not, what is it going to take for that to happen?
It's been on my radar for a little bit lately. Seeing a mine suspension is kind of one of those things where you're starting to see pain points from the mining space. And that's when typically things do start to look better in the future. But that doesn't necessarily mean it's going to turn relatively soon here.
Yeah.
One thing
Yeah.
that reading some other news stories lately is that all three of these companies were highly shorted companies. And so when you see big moves like this, what ends up happening is you get short covering, which is basically people who have shorted the stock are trying to exit now because maybe they're seeing there's not a whole lot more downward direction in the stock, and so you get these big pops in terms of, like I said, covering shorts. And so
Yeah, I'm bringing that
what you
up
had,
now, and here's the thing, like, you see SQM at 2.6% of shares short, and then, over 10% both for Lithium Americas and Albemarle, and you might think 2.6%. 2.6% is actually high, right? Let's start there. For a company that size, that's a pretty large amount of shares short, so 10%, especially for a company as big as Albemarle, that is a substantial millions and millions of dollars of shares that are, I mean, hundreds of millions of dollars of shares that are sold short. What we're seeing
yeah,
today, that's 14% up, 11%, 8% up. A lot of that is shorts covering. They're buying back some or all of their short positions. So
yeah,
it kind of nets that out.
yeah. And so for individual investors who aren't looking to short and probably want to buy something with some sort of long-term holding, I'm going to admit I don't know if this is like the light at the end of the tunnel and it's all up from here. There's still a legitimate chance that we could still see prices going down for lithium. We could still see oversupply, and these stocks could still go down considerably. Like, I don't want to, give any indication that that isn't possible. This is mining. Anything is possible. It could go all over the place. But these are the encouraging signs that you would want to see that would suggest that the cycle in mining is start to turn. And so that's promising.
Yeah, a couple things to add on to that. So often when you see a little bit of capitulation, which is with what CATL is doing, like you said, CATL is a big player in this too. So this is definitely needle moving to see them doing it. Sometimes the market's waiting for somebody to blink, right? And CATL has blinked, and that could be the catalyst for other operators in the space to maybe start doing the same thing and start pulling back on production a little bit, which could start driving prices up. Now we've seen Albemarle has taken steps to lower costs and to back off on some production. So this isn't the first, but it's a major one that it's coming out of a major producer in China, right? I think that's a key thing that we
Yeah.
want to talk about here.
And the other thing too is this is suspension of existing operations. A lot of the things that we have seen from, like, for example, Albemarle is
It's development. They've
pushing
pulled back on
pushing back
development.
development
Yep.
of not yet oncoming mines. This is actually trimming current production. So this is the next notch in the pain point for the mining cycle.
Pulling back on supply is a big step in the right directions. I agree with you. As somebody that's followed Albemarle for about a year and a half and has followed the mining industry to some degree for over a decade, the cycles are brutal. And the best time to buy typically is when you start to see some signs of capitulation and you have capital that you can invest for the upside of the cycle, right? For when the cycle does turn, with that willingness to get through the volatility that could continue, and being willing to accept that this could be a false signal and things could stay ugly, pricing could stay ugly, profits could stay depressed for an extended period of time from here before we finally start getting back into the upcycle. But if you're willing to ride that period of time out, this is clearly a signal that the worst might be over. It doesn't mean things are going to get better overnight, like Tyler said, but it's definitely one to keep watching closely.